Hello again, everyone. It's Vince Forer from TradeWinds.com, and this is our update for February 13th, 2017. Let's take a quick look at today's markets. Well, we saw equities extend their gains, more upside here. The Dow was up 142 points, hitting a brand new high, while the S&P 500 was up 12 at a brand new high. The Nasdaq was up 30 points, also hitting a brand new high. And have a look at this. The Russell 2000 has finally hit a brand new high itself. It was up 3.5 points today, and it played some catch up, but it got there. We're at fresh new highs across the board. Now, when looking at bonds and gold, both are about to face a major test. And for bonds, I'm using TLT, the ETF for the 20-year Treasury. And if we look at this, we came back here. We recently broke back below this 20-period moving average, but have now bounced back above it, have come back to retest it one more time. And if we look at the weekly chart here, it has been retracing into this down-sloping 20. So, different picture between time frames, and this is going to be a deciding factor here. Are we going to hold this 20 here and trade lower? If we do, I think we're going substantially lower, which is going to cause yields to go higher, obviously, in bonds. But if we can hold this moving average here, excuse me, on the daily, we may actually come back and move higher. There is a nice gap here to fill, but at this point, based on the slope, on the significantly lower sloping 20-period moving average here on the weekly, I think we actually head lower from here on bonds, but we should find out in the next few days. Now, gold here, if you look at the weekly, came back to retrace here into this downsloping 20 as well, but has managed to get above there and is now coming back to retest it. If it holds and bounces here, I think we go significantly higher on gold. If not, well, we certainly come back to test the lows here in the near future. So another significant test here for gold. Hopefully, we'll get some clarity this week, if not next week, at the latest, on both bonds and gold. Let's go back to the daily chart here and have a quick look at crude. Crude today was down substantially, 1.7%, down over a point, but from a technical perspective, really didn't do much, but come back within this range that it's been in for quite some while. Now, I want to focus your attention on Apple. And this gets interesting when we look here at this daily chart here. Obviously we're back to new highs here. We're fresh highs here on the daily chart. And if we look at the weekly chart here, you can see we're back at these highs. But where do we head from here? And, if we use the Fibonacci tools, first of all, taking the major low to high here, you can see that when it retraced right back to this 50% level and then bounced, which is just a perfect textbook Fibonacci retracement. And now, if we take the Fibonacci extension to use those same levels to see where we might be able to get to, how far or how much higher can we get to? Well, let me draw these on for you and squeeze this chart down so you can see the targets. And this is what the Fibonacci extension tool is telling us. We're back to this 100% level right around 134. The next target is the 127.2% extension, which comes in at 156. Beyond that, the 161.8% extension, which comes in just under 184. So those are your targets from here. If we don't manage to break through these highs, if we fail from here, that's one thing. But if we can break through this high, and it looks very, very likely that we do, if anything, what I would hope for is a retracement here near term for an opportunity to get in long for another run at these targets. But that's where I think we're going, 156, and then eventually the 184 area on Apple. Okay, that's about it for now. Enjoy the rest of your day, and we will see you on our next update.